Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, September the 27th, 2013. So we're going to do something a little bit different this week. This is a new charting technique. It's not new, but it's something fairly new to me. I've been meaning to begin learning this technique for a while. This is called Ichimoku cloud charting, and essentially cloud charting, or Ichimoku, is it literally translates to at first glance. So essentially, once you become proficient in it, and I don't claim to be proficient in it yet, but once you become proficient with this charting technique, it should tell you essentially what's going on right away. It should give you a trend bias. It should tell you, should you be long, short? Should you be just out of the market? And essentially what I'm going to do, I'm going to start off this week and just look at charts from a different perspective using the cloud charting technique. So let's start out with the Dow on the daily chart, as we usually do with this technique. And essentially what you see here is when you're above the cloud, you have a long bias, and when you're below the cloud, you have a short bias. So we're above the cloud, and we're actually finding support at the top of the cloud here on the Dow futures. And essentially, at this point in time, I'll explain this in a very basic manner as as I'm continuing to learn and understand it. This sort of cyan line here is your lagging line, and these two lines are sort of like, they measure more the range, but you can almost consider them like moving averages. But they're sort of like moving averages of the range of the last, I believe this is, and don't quote me on this, I think this is the last 26 periods, and this is the last 9 periods, if I'm not mistaken. And the lagging line is based on the last, I'm going to have to look at my notes. I'm going to say 26 periods, but I could be wrong. So essentially, I'm going to treat this like, when you're driving a car and you're looking at the gauges. That's essentially how I'm looking at this. Should we be long? Should we be short? I will tighten up the information on these charts, but just for the sake of trying something new and looking at this from a different perspective, when you're above the cloud, you have a long bias. When you're below the cloud, you have more of a short bias. When you're in the cloud, you're in a congestion area, you're in a do nothing, sort of like what I call a dead zone. And when you're flattening out and you're going sideways. So if you look at where we're at right now, like the lagging line here is above the cloud, that's a positive, and the shorter term average is above the longer term average, that's a positive. You're finding support at the right at the top of the cloud and at the slower, the 26 period there. So this is potentially a buy zone. Now look at how interesting this gets. Now we're looking really toppy here. Okay, we're looking really toppy here in the price action. But if you look at as long as we hold the cloud here and start pushing off again, this might potentially be a decent buy area for the Dow. Now, things that I don't like about it, like if you look at the daily momentum is still going lower. So what I'd like to see is some sort of bottoming process on the daily momentum. So from that perspective, not taking into consideration the cloud chart, I don't necessarily like it just because we're at support, but we have to recognize that we are potentially at support. Now, another thing that I'm looking at here is you've got the lagging line above the cloud, which is a positive, and these two lines are above each other, but they're starting to go sideways. So you can see this is essentially a range bound or sideways market. You want to see these more sloping higher, and you want to see the lagging line pushing up, also sloping higher. At this point in time, it looks like it's just trying to bottom. But having said that, I'm more bullish than bearish on this market while we're above this cloud, unless and until we break below this cloud and this lagging line, this cyan line, breaks below the cloud. So I'm going to look at all these markets just in terms of, a macro view. I'm not going to look at the short-term averages. I'm just going to look at the lagging line and where we are relative to the cloud. So here I see potential support, and if I just throw in another one of my usual analysis techniques, we're right at a 50% retracement from this high to this low. And if I actually showed you another chart, I don't want to confuse the issue too much here, but if you look at this weekly chart of the Dow, we actually fired a long signal and we pulled back to logical support. So we fired this long signal around 15,532, and we've pulled back, several hundred points, and we could still pull back higher. So I have a macro long bias on this market. I think we're going to pull back, and then if we push back through this high, I think we're going to hit new highs. This methodology with the Darvas squeeze here is telling me we have a potential target of around 16,400. That's 900 from the breakout point of these highs. That's 900 to 1,000 points potentially higher. So I also look at confirming methodologies and confirming indicators, and that's why I have that sort of macro bias on a weekly basis. So I'm looking at this and saying, okay, well, we're in a fib zone and we're holding the top of this cloud. Could we potentially hold the top of this cloud and push higher? Or what might we, we could still pull down. You can see momentum still coming lower. We could still pull down lower and then, follow through at some point in time. So if we were to actually do this and then, reestablish a move back up above the cloud, that would be really bullish. We have some seasonality coming into play where, typically we should be bottoming somewhere in October. If history repeats itself, we should be bottoming somewhere in October and then moving higher into, next June, July, August, into potentially September. So if you look at that from a seasonal perspective, and we put all these things together, I'm really looking to see where we're going to bottom in this market and look to see if maybe we can look at some potential long entries. Now, having said that, this move down could bring us to the 618. It could even bring us to retest some of these lower levels, into October. So we have to be really careful, and we have to look at where establishing risk might make sense. But, in the short term, we're at potential support. Question is, are we going to push off back to the high side? At this point in time, we don't know. Trading has been very tricky, very tricky around this point in time, or recently. So we really need to see where things might go pushing forward. So if we just, I'm going to try and keep this simple now going forward, and just look at, okay, the lagging line is above the cloud and price action is above the cloud. We're close to support. Are we going to push higher? Not sure, but I'm more bullish than bearish on this market. And let's look at the NASDAQ. So that was the S&P. The NASDAQ looks really strong. And you can see here, this is typically what you want to see in a trending market. You can see the cloud is pushing higher. These two shorter term averages have gone sideways, and you can see the price action has gone sideways. The lagging line needs to get back up above this previous high, but we're firing on all cylinders here. Let's take a look at the transports. Transports are more bullish than bearish as well. We have the same situation here with longer term momentum a little bit overdone, but we're above the cloud. We're going a little bit sideways, but I think this is more bullish than bearish. And let's look at a couple of stocks. Let's look at Apple. So you can see Apple, when it pulled back and it gapped down, Apple, in one of the previous videos we were talking about, the break above this gap here for a potential long signal, and we were talking about, give it a couple of days, let it settle out, and then let it come back up above the high of the gap. So you can see it really pulled down, but look at where it pulled down to. It pulled right down into the top of this cloud, this support area. We actually had a momentum shift here, and then we broke the high. This is more where we were interested in it, coming right back above the high of the gap down, and then it broke right above it, and now we're just, we're slightly above it still, but we're still holding the top of that cloud. So, this gives you a really good indication. Like if I were to look at this and just follow the methodology, nowhere in this area would I want to be short. I'd really want to be buying pullbacks to support. So this would have been a good pullback to support area. The break above this gap would have been a good move back up to the high side. So, This is really designed to keep you on the right side of the market and looking for, your macro bias direction. So if you look at Google, so Google right now, what Google's telling you, it was in this cloud for a long period of time. It was sort of saying, don't mess with it. But now if you look at your lagging line is coming below the cloud and your price action is coming below the cloud. So this is a tricky area to be in. If we start, your momentum starting to bottom, if we push back above the cloud and the lagging line pushes back above the cloud, then we might want to look at, we should be on the long side. At this point in time, we're at support, but this is, more bearish than it is bullish. So I hope that makes sense. That's more bearish than it is bullish, but you're really close to a, do nothing zone in terms of where you are in relation to the cloud. Let's take a look at, let's look at some of the energies. Let's look at the natural gas. So the natural gas here is in the cloud. It's kind of in a do nothing area. The lagging line is below the cloud, and 352 is a key level here. So this is sort of like in a do nothing area. Don't mess with it. And let's look at according to this methodology, crude oil. Crude oil is in the cloud. It's in a do nothing, don't mess with it area as well, right in the cloud. And if we look at, let's see, we looked at natural gas, crude oil. Let's look at gold. So gold futures are right, they've been holding the top of this cloud here, and they're essentially just coming back out of this cloud. So, looking at gold futures here, if we were going to do anything, combining a few different methodologies, I think if we were to break above this trend line, we're still, into October, we're still, in a period of seasonal strength in gold. And if you look at this pattern, I know a lot of people got hurt trading the gold, but, you've got a low, you've got a higher low, higher low, higher low. It did not violate this low here. So from a structural perspective, you're still essentially higher. And if you look at it from that perspective, you've got a sort of a triangle going there. So I think if we were to hold the top of this cloud and push back above this trend line off of the cloud, and the lagging line, is above the cloud, I think that this is a potential area where you've kind of shooken out most of the short-term long hands, and you could potentially look to push back up to the high side for a retest of, what is this level here? This level is 1435. So a lot of people have been just getting a little bit beaten up in gold. They're probably getting tired. And I think if we can get back up above, this 9 period here, I'm sorry, that's actually the 9 period is below. But essentially, like, if we were to get this yellow line crossing back up above, the price action crossing back up above that trend line, and you get a crossover, that's a really good signal. See, when these lines cross over, this is a short-term negative, but it's holding support. So if this yellow line were to cross above this this pinky sort of magenta line, then I think you could get possibly a retest of these highs. So you've got the lagging line is still above the cloud. We need to get back up above that trend line and stay above the cloud. And I think that 1435 is an interesting level. If you don't get above there, then I don't think you can really look at the long side. And I think you have to look at, just potentially going sideways and even potentially a break to retest the low. So this is sort of the make or break area. You would need to get above, probably around probably just above 360, 365 in order to confirm that, you're, potentially going back to the high side. So that looks sort of interesting. And let's take a look at silver. So silver's doing the same sort of thing. You've got momentum bottoming. You've got this sort of divergence happening off of the slow stochastic. It's looking constructive in terms of building a short-term base, and you're holding the top of this cloud. So if we could get a pushback off, the lagging line is above the cloud. This looks like a potential support area for a push higher. And is it actionable? Not really, unless you're, unless you'd say, well, I'm gonna manage my risk really tight. I would maybe consider that if I had a strong conviction, which I really don't. But if I had a strong conviction that this was going to resolve itself higher, then, I would establish my risk pretty tight, either just below those lows or just below this cloud, and look for a retest, for a first target of these previous highs. Or, I would just wait until it confirms, and I would buy the breakout above that trend line. So I hope that makes sense. Let's look at copper. Copper's holding above the cloud. It's more bullish than bearish. And let's look at some currencies. Let's look at the dollar index. So look at the dollar index. If you look at, we had on the other traditional charts, a long-term support level right around 80, 90, let's call it, right around there, 80, 83, 80, somewhere in that area. And if you look at, we broke that long-term support with the Fed announcement on that wide range bar, and we're now holding below that long-term support. So if you look at this, we're really extended, right? We're really extended to the downside, but we are on the bearish side of this cloud. The lagging line is pointing down. It's on the bearish side of the cloud. Having said that, momentum is buried to the downside. It's already way oversold. And, but we are holding on the bearish side of this. So the dollar index at this point in time looks very negative, and it is, from this methodology's perspective, on the bearish side of the cloud. If we look at the euro, this is what I find really interesting. When we have the major pullbacks, look at where it pulled back to. It pulled right back down to the top of the cloud. This seems to be, this is something that I'm studying more, but this seems to be a really interesting area to establish risk. When you get these massive pull downs, these massive pullbacks rather, look at where they're holding. They're holding right at the top of the cloud. And, if you're in these areas and you're saying, okay, well, I'm going to take a position here, well, your risk is defined, because you can say, well, if it breaks below the cloud, then I'm out. You have to manage risk at all times, in my opinion. But this to me looks really, these areas look really interesting, where you get these sort of pushes up, pushes down, and this is, definitely an established area. So this is forcing me to look at the market from a different perspective and evaluate, like, am I really, am I always looking at things the correct way? And to me, it's starting to make sense to look at things from another number of perspectives and sort of build a consensus. So that's what I'm starting to do, looking at other methodologies. The methodology that I speak about every week is my primary methodology, and these are like secondary methodologies just to play devil's advocate in my thinking and to force me to look at other data points. I hope that makes sense. Let's look at the USD CAD. So if you look at the USD CAD, we do have a momentum shift, and we do have a divergence in momentum and price back up to the high side. But the question is, okay, we're pushing back up to the high side, but now we're on the bearish side of this cloud. So are we going to find resistance around 104 and not get higher, or are we going to break back above the cloud? You can see, we're more bearish than bullish at this point in time. So from a trending perspective, we can't really expect a lot of upside from here. So this is sort of changing my thinking. I was looking at, getting above $1.05 before, for those who've been watching my videos, and getting up to $1.08, somewhere up here somewhere. But, this is sort of changing my thinking, unless and until we can get back up above this cloud. So I hope that makes sense. Are there any markets we still need to look at? Let's look at the 30-year. So look at this. This is interesting. The 30-year bond is overdone on the buy side, momentum-wise. It's overbought. And we're now right in the cloud. But if we break back up above this cloud, you can see, you can visualize, if you've been watching charts long enough, you've got this really long downtrend line. So let's say we draw it loosely here. You've got a double bottom, and you've broken that trend line. So that is putting us more bullish than bearish from that perspective. But right now we're in a don't do anything, you're in the cloud area. But if we break back up above the cloud and we pull back and we hold the cloud and then we push back off, this is going to start looking more, it's going to start looking more bullish than bearish. At this point in time, I think it's overbought. And, we're in a do nothing area, but this is something to keep an eye off of this double bottom here. If you notice, you've got a double bottom here, right in there. Okay. And you have a bullet. You see this low was a little bit lower and this high was a little bit lower in momentum. You've got a bullish divergence there. So this is looking constructive. We'll have to keep an eye on this. Let's look at the 10-year. So the 10-year, if you notice, the 10-year put in that same bullish divergence off of that low. You've got this kind of trend line break as well, and now you're getting back up above this cloud. So the lagging line is still not above the cloud yet, but you've got this crossover in the shorter term averages, range averages, and you can see that, you know, essentially you're looking, you're starting to look more bullish than bearish, even though you're overbought. So if we look at the, let's look at interest rates on the 10-year, TNX.X, and you can see now the interest rates are starting to break down. And several videos ago, I was saying interest rates look like they're going higher as long as they hold this trend line. Well, they're not holding that trend line anymore. And in fact, they've broken that trend line, and it looks like the Fed, through its policy and its announcements, really wants to see interest rates remain low and you know, continue to stimulate the economy. That tells me that things aren't as rosy as the media might make it out to be, and you know, they want to inflate their way out of this credit mess. So to me, what this is telling me is, you know, interest rates are not yet going higher. I believe they will at some point in time, but we have to look at what's immediately in front of us now. And if you look at this, they broke this trend line. They're in this cloud, this indecision. If we do break below that cloud and the lagging line comes below the cloud, then, you know, we're back. We are back to, you know, the situation where we were going back, where we were below this cloud for quite a long period of time. So, in fact, it's actually looks really choppy from this perspective. But at any rate, this to me is looking like interest rates are unclear, and but they have broken that trend line. So they don't look like they're going higher in the short term. In fact, bonds look like they're going higher, and interest rates look like they are going lower in the short term. So let me just think quickly out loud. We've covered most of the markets. I'm just wondering if there's any markets that we have not covered. Did we look at crude oil? We did look at crude oil. We looked at some major currencies. I think that about wraps up this video for this week. I hope that introducing you to Ichimoku cloud charting will sort of broaden your horizons this week, and maybe maybe give you the impetus to, you know, to look at new methodologies from time to time and to learn new things. I'll try to do this every once in a while, and I'll jump back and forth between different charts. So I hope this helps. I'll be probably talking a little bit more about Ichimoku as I learn more going forward. I have a pretty basic understanding of it at this point in time. But looking at charts for so many years, I get the main message of the chart and of the methodology. So, but I will present a little bit more on the educational side in terms of, you know, the little nuances with using these charts as we go forward. And I will flip back and forth, and every once in a while we'll introduce, you know, new charting concepts from time to time. So I hope this helps. We have a upcoming CSTA Oakville meeting on, let's see, it's going to be the second Wednesday of October, which is the 9th. We're going to have David Cox from CIBC Wood Gundy speaking about his perspective on trading plan development, and that should be a really, really good presentation. We had David out at the CSTA Oakville last year, and his presentation was excellent, very well received, very good, knowledgeable speaker. So stay tuned for that announcement. It will be coming out early next week, if not, you know, with this video, along with this video, but there will be a couple of reminders. So stay tuned for that. You're not going to want to miss it. So good trading. Stay safe in the markets. We're in some transitional markets right now. Stay safe. Keep your powder dry. In my opinion, trade light. That's what I'm doing until we get some better trends developing in these markets. Good trading and investing, and all the best. See you soon.